brought to you by Ayoko, Africa's leading integrated technology services company. Sticking with company developments, Naspers remains bullish about China. This at a time when global markets are uncertain about the nation's economic growth as the country battles with high debt levels, a slowing in population growth, and a slump in its property market. Business Day's business writer Mudiwa Gavaza joins us now for a look into Naspers' optimism on China. Mudiwa, thanks so much for joining us again. So let's just lay the ground here, right?
Yeah. We
know what China's economy looks like post that pandemic, slowing growth. We've got the property crisis as well. I don't know, sometimes I think that markets and economists may have overestimated that recovery. I don't know, what do you think?
I think there's two things.
Yeah.
You know, firstly, the recovery, like you said, hasn't been what some may have expected, especially given how high that economy was running at over the last couple of decades. That's the one issue. And then secondly, we talk about a slowdown in China, but the rate of growth is still, you know, pretty good.
Numbers we can only dream of.
Yeah, they're still pretty good, you know, relative to the rest of the world. And then I think the last thing I'll say is something that Naspers' CEO, you know, Fabricio, you know, Bloisi said to us. He said, listen, right, we just came from China a few days ago, and it's only when you're on the ground in China that you actually remember and, you know, you cut out the noise. There's all these naysayers about what's happening in the Chinese economy, but when you're there on the ground, you remember that it's the biggest internet market in the world. And just for Naspers themselves, because they're the biggest, you know, they're the biggest shareholder in Tencent, right? They've got WeChat. And just on WeChat alone, right, they've got 1.3 billion people using WeChat alone. Just WeChat. Just one product, right? 1.3 billion people. Those are numbers that people dream about. Those are people that salivate for. So, you know, I guess this is the picture that we're painting there.
So outside looking in, it seems, you know, the negative sentiment is kind of taking over. But as you've mentioned, Bloisi going in with his team and saying things look good on the ground. With that being said, right, we talked about Tencent, we talked about WeChat. Then why did they sell their stake in Trip.com? And, you know, when you read about that, the headline suggests that, you know, here's another company deciding to ditch China.
Yeah. Well, what Naspers/Process has been doing over the last year or so, I'm going to call it a year, 2 years, in business speak, they'll say that they're rationalizing the portfolio. But in essence, they are exiting, you know, businesses that they feel like aren't core to them, and they have also been exiting investments that they feel like are no longer, you know, providing the growth, or areas in which they feel like we've realized, you know, a return and we're willing to, you know, take that on. So, for example, you know, through Tencent, if I remember correctly, they also had, you know, a stake in, you know, companies like JD.com. But over the years, they've also sold down, you know, some more. They've also benefited from sell downs in some of those stakes. Perhaps not directly, but, you know, benefiting from that. We've seen them. In South Africa, it's a different case. When you sell off a business like Superbalist, right, that's a business that's not doing well, right? But I think what I've just said sort of encapsulates where they are right now. Exit the non-core businesses, exit businesses that they feel like they may not get a return from, or, you know, just because at the end of the day, they are an investment company. Once you've realized that we have made the return that we want, right, let's sell it off. Let's put some cash on our balance sheet.
Now, we've seen Naspers being very bullish about China. Another market where it seems like it's eyeing growth is India.
Yeah.
They've been invested in India for about 7 years now. Do you think that's where we're going to get, you know, the next super investment like Tencent?
Well, if you were to talk to the guys at Naspers themselves, they would probably venture to say that they've been in India for closer to 20 years.
Oh, okay.
Yeah, no, it's been a long time coming. They started off with small investments here and there, but now they're quite bullish about it. And it's actually 20% of their whole portfolio is in India only, right? So they've taken a huge position, just in India alone. China was always, where they were getting the big thing because of Tencent, but now India now becomes the, what they see as the proper growth market, because you have a lot more people coming online, a lot more people registering for some of these internet services. So in India is where they're seeing, the potential. And now there's a word that Irvin too, who is their chief investment officer, uses. He calls it illuminating value, which basically means highlighting value in the portfolio, because over the years they've been fighting, to show that there's more to them than just Tencent, right? And India has been providing a lot of that opportunity. Recently, they did an IPO of Swiggy in India, and just if I remember correctly, they said that they invested, it should be 1.3 billion into that business over the years, but just on IPO day alone, their stake had grown to 3.4 billion, right? So you've invested that, but you're already realizing some of those returns. So India, as far as they can see, growth market, and also it's the market where they can see a pipeline of IPOs down the line. We've got Swiggy. There's a couple of other companies that they have in their portfolio that they're already seeing. PayU is another one that's being prepared for that potential market listing soon.
Mudiwa, we could talk forever about this, but unfortunately, we've run out of time and we have to leave it there. That was Mudiwa Gavaza, business writer for Business Day. Brought to you by Ayoko, Africa's leading integrated technology services company.